past week and the stocks and how they've done. Well, Tesla's up 12%. There's a lot of noise and volatility with that one. It's not one for me. Whilst I have no doubt in the next 5 years, I'm pretty sure it will have at least doubled, if not more. I just don't want the ride, and that's okay. It's an important lesson in investing to know. Just so you know, I do continue holding JP Morgan and Goldman Sachs, and my wife and son own a whole bunch of these as well. I'll show you how they've done in the past year in a moment. Um, by the way, speaking of some of these, don't just chase the weekly moves and the weekly momentum. There is a temptation to say, oh my God, Eli Lilly's gone up 6%, and then read too much into that. To evaluate a company, you want to see the profitability compared to the share price. You've got to correlate it to your time frame. You've got to then look at, is our revenues growing, a dividend growing, and that's a minor factor, dividends. And historically, how's the performance been? How volatile is it? So, for instance, that's not for me. Thank you very much. I don't want one with that level of volatility. There'll be others which you might put on your watch list, like a Lamb Research, which doesn't always consistently give great returns. So you can dip in and out across different years. Not trading, but there'll be some years you want to leave it out, some years you want to be in. You might also look at others which, again, on that same kind of semiconductor watch list, say, well, they'll do me well, but I don't necessarily want to buy and hold forever. Or when they dip, I don't want to necessarily buy more. They're the type where when they dip, I might want to exit. Others, when they dip, you'll probably want to buy more usually, unless you think it's going to be a 2022 kind of severe downturn where even Meta fell 70%, where the right thing to do wasn't to keep buying more, but just to exit. Most of the time, you want the kind of company where you want to buy more if it falls. But those same companies, like a Meta, where normally you want to buy more when it falls, if they're going to have severe falls, and the way to judge that, like 2022, is it's pretty rare, and it happens when short and medium term prices are falling, and it's not guaranteed that they'll continue falling like this year. It fell a little bit and then they've recovered. All sound a bit complicated? Well, actually, you can easily make a checklist, and it saves you a lot of time and clarifies your thinking. If you do it before, you have to long before you have to make the decision, not just before you have to make the decision, because you think clearest when you're not just about to have to make a decision. Oracle, Palantir, well, if I had to be an oracle about Oracle, yeah, if you elongate the time frame in any company, it helps clarity of thought. And Oracle long term, you might say, well, yeah, long term, fine. The shorter the time frame you're trying to guess and judge it, the harder it is to come to a conclusion. A chap I used to work with, Alex van Summeren, has joined Palantir's Capital group, which invests in new technologies. He was